So what are the key points of these new tax bills that President Tinubu signed into law today? Well, there are 4 of them: the Nigeria Tax Bill, the Nigeria Tax Administration Bill, the Nigeria Revenue Service Establishment Bill, and the Joint Revenue Board Establishment Bill. Out of the 4, the one that will affect the average Nigerian more is the Nigeria Tax Bill. One of its central provisions is that people who don't earn up to ₦1 million a year will no longer pay income tax. Before now, people who earned as little as 300,000 naira a year used to pay up to 7% income tax. The other notable provision is that small businesses whose gross turnover is not up to 50 million naira a year will not pay company income tax. Corporate income tax is now set at 30%, and value-added tax, or VAT, is now 7.5%. There'll be no VAT on essential items like food, education, and healthcare. VAT is also exempted from things like rent and public transport.
What you have provided is leadership and courage in the face of mounting dispute. Nowhere in the world that tax reform will be any easy.
President Tinubu there. Well, for more on this, I'm joined now in the studio by the chairman of the Presidential Committee on Fiscal Policy and Tax Reforms, Taiwo Oyedele. Thank you very much indeed for coming in.
Thank you, Charles. It's
And
a pleasure to be in your program.
I have to say that congratulations are in order.
Yes.
And you've still got all your hair on your head. I mean,
that's film trick.
After what an extraordinary journey it's been. But just boil things down for us in terms of the key highlights of this new tax act. And top of the list would be the fact that it eliminates so many small overlapping taxes, eliminates duplication, and merges all these into a single, easier to understand code. And that is expected to make doing business easier, isn't it?
Absolutely. So thank you very much. I think a good starting point would be to say, where were we coming from? We had a regime. You've seen had now, even though this new law has not taken effect. It will take effect from January. This system we have, you can summarize it as the tax tail wagging the business dog and progress dog.
I like that.
It was so bad that we're taxing investment, we're taxing capital of businesses, we're taxing poverty. Poorest people that should be receiving subsidy from government were made to pay taxes. And we had a system where things were so opaque and convoluted that if you had access, you can do so much business and not pay taxes. And I'm a honest Nigerian, maybe not as rich as you. I don't have access, well, and I pay a lot of taxes.
Please don't come to me with your tax people. Let me let you know ahead of time
that's
now,
inequity.
Right.
So, and then we have small businesses that are overburdened even disproportionately than large firms, just trying to survive. And everywhere they turn is one tax or levy. Was completely impossible. So that system was not sustainable, and it wouldn't take Nigeria anywhere. So the need for the reform, and this should have been done, to be honest, like 30 years ago. So there was, and that's why I'll give the credit to the president again and again. This is a real demonstration of political will, courage, and character. Because this thing got so heated at some point, and people were calling him all manners of names, we were blaming him. And some of the things we were blaming the man for, he didn't even know we put them in those bills. Because, of course, you can't sit with the president. Each time we try to give him an update, it's maybe 30 minutes, 25 minutes. He can't go through 400 pages.
Absolutely.
And he took all of that. There was not a moment that he blamed us for anything. So these bills, the tax, it's no longer a bill, the Nigerian Tax Act in particular, what we did was to repeal so many laws, including those that are older than Nigeria's independence, like the stamp duty laws. And then we said to ourselves, some of them are no longer even relevant. We got rid of them completely. Some are partly okay. We took the parts that are okay. And then there were new ones. And then we put all those together in one code, Nigeria Tax Act. The overriding principle is fair taxation. And fair taxation means don't tax poverty.
Right.
Fair taxation means you shouldn't come in the way of progress. Allow businesses to invest, let them make prosperity and then share in their prosperity. Don't tax them ahead of time and increase their cost of doing business, increase their risk. So overall, this is a new day for Nigeria. I can't wait for the implementation to start, because once the implementation starts, people will see the impact immediately. It's not like first subsidy where they say, let's make the sacrifice and then we're hoping we'll see the benefit.
Right.
This benefit is going to be instant for majority of the Nigerian people.
Yeah, the difference, of course, is that a lot of people would say is that many people weren't paying taxes anyway. Particularly a lot of people in, so-called poor people. I mean, they got their money in ad hoc ways, and you were never ever going to be able to get your hands on that money in any case. So it's only the ones who have sort of measurable, identifiable incomes that you can, this thing applies to.
Great question, Charles. You're right, because if I wasn't paying taxes before, and you now exempt me from tax, you haven't really done anything to me,
Absolutely.
right? Like, I don't feel anything. So you're right to that extent. You're right that there is a large majority of Nigerians, poor and rich, middle class, who are not paying taxes. And for the poor people that will now exempt from tax, they will feel no impact. But people that are paying before will feel it. There's a second dimension to it. There is the taxes that people pay, mostly illegal taxes. Everybody pays that, either directly or indirectly. When they're bringing yams from the north and they're taking it to the south, we spoke to those guys. They spend between 500 to 700,000, sometimes more than 50 stops.
Just on the route.
Yeah, when yam gets to Lagos, the poor man can't afford it. That's taxes you're paying indirectly.
Yeah.
We also have implicit taxes where you have to do what government should be doing for you. Everybody is having to incur that. So the idea is, in the immediate term, the people who have been paying taxes will see a relief. And in the medium to long term, whether you were paying taxes before or not, you see a big relief in the overall cost and burden of tax that you bear. Right.
And in terms of who will be most affected, I mean, you said it's going to be low-income earners and small businesses. They will benefit the most. But high earners will feel the pinch, will they?
Not exactly. It's right that the low-income earners are small businesses.
Right.
So low-income earners, over 30% of the bottom of the society, private and public sector, will no longer pay personal income taxes. For small businesses, more than 90% of them will no longer pay income tax. They will not pay VAT. They don't need to charge. They will not deduct withholding tax. They won't pay PAYE on the employees. Big relief for them. Just let them grow. And then they can start paying taxes. They'll see the biggest positive impact. Now, for the middle class, they also see a decline in their tax burdens. Businesses will see a drop in their tax burden. The rich people will see a slight increase in their taxes.
Well, thank God I'm not rich.
You're one of them.
No, I'm not.
I'm almost certain.
Thank God I'm not rich.
But the reason also is because we need to balance the books as much as possible.
Right.
This does not completely balance it, but it would be irresponsible for us to just give away everything to everybody, including the rich. We're going to come back to another problem of having to print money to spend.
Right.
Now, but there's also the other dimension to even the rich people. There's something in it for them. Number one, these rich people tend to be the one that own businesses.
Right.
So if I have a business and you give me tax exemption, you reduce my rate, maybe benefit is 5 million, you ask me to pay 2 million personal income tax. Overall, I'm actually better off.
Yeah.
If they invest in the capital market, the threshold for not paying tax is about 150 million. So we've been very intentional. You buy a house, on buying houses, no VAT. In a nutshell, there is something in this bill for everyone, more for the low income and small business owners than the rest, but everybody benefits.
Right. And I want to say I appreciate you for speaking in very sort of layman's terms without complicated, because as I'm sure you know, not only do most people dislike taxes, they also find any discussion of it totally dull and boring and completely above their heads. So I mean, this was your chance to change this perception. and to make it sound a little more sexy, if I might say that. And it actually is coming across rather well.
Thank you for the feedback.
So we appreciate that very much.
Yeah.
So by how much is this new and improved tax system expected to grow relative to the economy?
Thank you. So today, the Nigerian economy, it's in the region of maybe 270 to 300 trillion naira, and not big enough. But when it comes to the tax yield, it's even very embarrassing. Until last year, we're doing under 10%. South Africa doing 26%. Some more developed countries doing 30, 34, 40, like France. So the yield has been so small. And when we did our analysis, what we found was the tax gap, the difference between what we are collecting and what we could be collecting is as high as 70%. Now, that gives you two major challenges. On one hand, it means you're not collecting the revenue you should be collecting. On the other hand, it means you are rewarding the people who are evading taxes because some are paying.
Right.
So we needed to fix that. And therefore, in the design of the tax bills, now tax laws, what we have put there are measures to make it more difficult, more costly for you to evade taxes, and a lot easier for you to do the right thing.
Right.
So with that, without raising taxes on people, we think that we can close that gap by more than half and therefore double Nigeria's tax revenue. This is the reason why we're so comfortable and confident that we can raise Nigeria's tax to GDP ratio from under 10% to a minimum of 18% within 3 years. Just 1 year gone, and we've seen the progress already. But I know this does not complete the story. People will say, after collecting the revenue, so what?
Right.
So our reforms also address the application of tax revenue and other revenues of government, including enhancing transparency and accountability, almost like a reset of the social contract. So Nigeria can work for Nigerians. Yeah,
that's the fact that you mentioned social contract is actually very interesting, because a lot of people think of they bring up the issue of dysfunctionality of government and how you ensure that the government isn't dysfunctional when it comes to picking up, actually collecting the tax revenues and what they do with it. And it raises that question of the social contract when it comes to tax laws.
Yeah. So you're right. We think at the heart of the social contract is the tax system, because it's how you truly demonstrate that you belong to a society. You part with your resources with expectations of government providing certain things for you.
Right.
Now, society begins to break down when either you don't pay your taxes or you pay your taxes and the application is nothing to do with your livelihood, well-being, but to take care of some, politicians. So that problem is a big one that we need to address in Nigeria. Addressing it will take time, because what we found out was the level of trust is so low, even among governments. And you cannot enact trust into law. We can't say, Mr. President has signed today, from now on, Nigerians must trust their government.
Right.
It has to be earned.
Absolutely.
The process of earning it, intentionally for us, was co-creating the solution that became law today. We had over 100 members in my committee at some point from all walks of life. We were very inclusive, people with disability, young Nigerians, Nigerians in the diaspora. So we've now created all of this. Maybe the controversy was also very useful because more people paid attention to us and were able to clarify those issues. Now we're here. Going forward is to constantly remind ourselves about this social contract. In fact, in my committee, we came up with a concept that is bigger than the social contract. We call it the socio-economic contract or covenant, in the sense that government must design their policies, including fiscal and tax, such that they do not distort economic activities, because taxes are the consequences of economic activities. And when you do collect those taxes, remember, it's a means to an end, not an end in itself. You collect it because you want to take care of the people. This was the reason why we convinced ourselves that it doesn't make sense to tax poverty. You should actually be taking care of those people. You fail to do that, then the worst thing you can do to them is them to pay money. They cannot give you what they don't have. So this is a bigger conversation than the tax bills.
Right.
We think that part of that will go right into the Constitution itself. It will go into our budgeting system. It will go into our accountability framework, audit and control. And even the Nigerian people must pay more attention and ask more questions. What these new laws will do is make more information available.
Right.
But if we're not looking at those things, nothing will change.
That's a good point.
Yeah.
Just stay with us, because I've just been given something that I'm told came from the presidency. I'll read it to you in full. It says, President Bola Tinubu has signed into law, which we said at the beginning of the program, he has signed into law the 4 new tax bills recently passed by the National Assembly, describing the new laws as pivotal to the success of the administration's reforms and the country's prosperity. The bills are the Nigeria Tax Bill, which aims to consolidate Nigeria's fragmented tax laws into a harmonized statute, the Nigeria Tax Administration Bill, which will establish a uniform legal and operational framework for tax administration across federal, state, and local governments. And the others are the Nigeria Revenue Service Bill, which repeals the current Federal Inland Revenue Service Act and creates a more autonomous and performance-driven national revenue agency, the Nigeria Revenue Service. And then the Joint Revenue Board Bill, which provides for a formal governance structure to facilitate cooperation between revenue authorities at all levels of government. At the signing ceremony at the State House, President Tinubu said that the occasion presented a new lease of life to every Nigerian and future generations. Mr. Tinubu commended the leadership and members of the National Assembly for passing the bills despite initial misunderstandings. So that's the knob of it. And I think that actually rather properly encapsulates what all these bills that you've consolidated into a tax act now, what they're all about. But let me ask you this, because one of the issues I think that came up with the governors was the issue of VAT. For instance, and one of the issues was obviously the sharing formula.
Yeah.
I mean, how is it now going to be shared?
Yeah, that's an interesting question. So, so many of our stakeholders, including governors, didn't fully understand how VAT was being shared currently. And therefore, they didn't realize that there was a problem with the sharing formula, in the sense that it was skewed against any state that didn't have headquarter companies or companies located in their states. The biggest beneficiary of the current system happens to be Lagos, for the mere fact that most companies in Nigeria are headquartered in Lagos, the big ones. So we thought that wasn't fair, because VAT is a consumption tax, and we should give you credit for what is consumed within your territory, regardless of where that remittance is made. Because companies tend to remit taxes based on their head office, where they have the finance function. That was thoroughly misunderstood. So when we started explaining, we realized that there was the trust deficit, such that whatever we're saying, people were not listening. So that took a while. So we had to take a step back and engage one-on-one. We also use people they trust, that are knowledgeable. We explained to them. If they understood, they could explain to them. So overall, that worked out. And eventually, we got the governors in the room. And in fact, they finished that meeting using the word, we strongly support the reforms. We were very excited. That was the turning point for us. Once the governor said it was okay to go ahead, the whole thing just, I'll say, the level of controversy went down to like 10% of what it was. And from that point onward to where we are today. So we're grateful to them. That has been resolved. Now, to your question about how is it shared now, what we had identified was the fact that we were not paying sufficient attention or giving sufficient credit to where consumption was taking place for a tax that is a consumption tax. We wanted to fix that. So we said, let's give 60%. That was what we thought was ideal. In fact, some of us said, why don't you just make like 80, 90? We didn't know. We were looking for trouble. So based on what the governors asked us to do, we reduced that from 60 to 30%. And then equality is 50% and population is the balance of 20%. So it is progress from where we used to be, but not quite where we would like to be. But we also accept that, progress is gradual. maybe it shouldn't be expected that everything will turn.
Yes.
You
don't
good
wave a
overnight.
magic wand and everything happens.
I don't think it happens anywhere in the world like
Yeah.
that. So
But
it's progress.
Yeah, but in terms of the sharing formula, the share that belongs to the state government.
Yeah, okay.
The sharing formula, that's based on equity, derivation, and consumption.
Yeah, so within, there's the vertical and horizontal, which is when you collect the VAT, the federal government should take, they used to take 15, we reduced that to 10.
Right.
One thing I also need to commend the president for, he just agreed, like, this is a lot of money that the federal government is ceding to the subnational, so he agreed. And then their portion as a state government increased from 50 to 55, and then local government 35. Now, with that, the portion belonging to the states and the portion belonging to the local government, we need to share it amongst them. So that sharing amongst them is what we use equality, population, and derivation as the basis. And the formula we ended up with eventually, based on the advice, I should say instructions of the governors, 30% for derivation, 50% equality, and 20% population. And I think it's progress, so we'll get there.
But of course, it's one thing to come up with new tax laws, quite another to enforce them. How do you intend to do that in a country where many people are off the radar and operate within the informal economy? Yes,
interestingly, there's this narrative about informal sector is where your money is. When we did our analysis, it was not supported by data. What we got from our data is that only 3%, the top 3% of the informal sector can truly pay taxes. So what we have done now is, why worry about the 97%? The bulk of the guys in the black economy are just hustling, trying to survive. We shouldn't be chasing them for taxes. What we should do is to try and collect data from them. In these new tax laws, we've designed a system that makes it attractive for you to want to register. When you register, you get more benefit than if you don't register. So what that process will do for us is it will help us formalize a lot of informal sector.
Right.
Primary objective is not to collect taxes. No. It's to help them do some record keeping organization so they can scale and grow. As they grow into the tax nets. And in a way, I think this is fantastic because you're just driving the economy with a long-term focus. Not what you collect today, because if you insist on collecting the maximum amount of taxes today, you'll be taxing the seed, not the fruits.
That's very interesting. And what about the big elephant in the room in Nigeria, corruption, overzealous sort of tax collectors? Could that undermine all your good intentions?
Yes. We had that as part of design. We see corruption from the tax officers' side. We're not saying all of them are corrupt. A good number are. We see corruption from taxpayer side. Most of them are corrupt. And then the tax agent, the professionals in the middle, many of them sell tax evasion for a living. And I'm not exaggerating anything. They sell to company A and move to company B.
Yes.
So what we've done is to design the process such that will no longer be easy, and over time, it will no longer be possible. So as a tax agent, now you'll be registered, you'll be given a number, everything you do on the system is tracked. You must meet two conditions. Number one, technical competence. You have to understand the returns you want to file on my behalf. Number two, commitment to ethics. You can't see 10,000 turnover and say it's 8,000, right? You're going to be de-accredited and there'll be consequences. That's number one. On the tax officer side, we're saying you shouldn't be applying discretions. So in places where we had discretion, maybe we've reduced by 95%. Let things be clear and limit human interaction. Imagine you can do all your tax affairs without knowing where the tax office is. Nobody's going to ask you for a bribe. And then from the taxpayer side, those companies and businesses, what we've done is, if you do any evasion, it will become very expensive. For example, if you import stuff and you refuse to pay the right amount of import duties, you cannot claim a deduction for that item for corporate tax purposes.
Right.
So when you sit down and do your maths, it will just make sense that you should pay the right amount of tax.
Right.
So we've done a structural reform of something that is systemic. It won't be a function of who is head of FRS or who is president. The system will just work. That's exactly what we've done. It will not eliminate corruption 100%, but it will reduce it drastically.
Well, I'm glad you've taken the time to come and explain all this
Thank
to
you.
us. Let's see how all of it manifests in practice going forward. But you certainly got a great grasp of the theory. But I mean, I would hope you would, because you're the chairman of the Presidential Committee on Fiscal Policy and Tax Reforms. Thank you very much indeed.
Thank
Taiwo
you.
Oyedele.
Thank you for having me.